Good morning and happy Friday to you. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a positive start on the final trading day of the week after US economic data calmed slowdown fears. Oil prices cooled off after surging to a 5-week high on the back of a drop in US crude inventories. Mukesh Ambani's Reliance Jio announced tariff plans for its Jio fiber broadband, with services starting at 699 rupees per month. Market regulator SEBI has ordered a forensic audit of Sun Pharma's financial statements for 3 financial years between 2015 and 2018. Tata Motors Managing Director Gunter Butschek has said that the Indian auto growth story is about to collapse due to low consumer sentiment and non-availability of liquidity in the system. And former Finance Minister P Chidambaram was sent to Delhi's Tihar jail after he was sent to judicial custody on Thursday over FIPB approvals granted to INX Media in 2007. All right, now let's talk about the US markets. US stocks and government bond yields rose on Thursday after the US and China said that they would hold talks in Washington in October, reigniting hopes for an eventual trade truce. Positive jobs data also boosted sentiment. Abigail Doolittle sums up all the action in Wall Street in this report.
Thursday's Wall Street session was risk-on, with stocks surging and haven bonds falling. Gold and silver also fell, those precious metals. So investors wanting in on growthier stocks and other risk assets such as commodities, oil and copper, and out of some of those haven assets. As for stocks, the Dow, the S&P 500, the Nasdaq climbed for a second day in a row, really rebounding from Tuesday's losses. Overall, those indexes on Thursday up 1.3% or more. This on positive movement for trade talks between the U.S. and China in October. Investors wanting in on the stock choppiness of August, buying that dip overall, and again, sending stocks higher. Now, precious metals such as gold and silver fell, the worst day since November of 2016, really wanting out of those haven assets, again going toward growth. That was true too for bonds. The 10-year yield surged. It was higher by 10 basis points. Price trades inverse to yield, so that tells you that haven bonds were falling off. But with those yields rising, that helped out the financial sector, up about 2% on the day, even more depending on what index you looked at. Banks tend to do well when rates rise. It helps banks with their lending activity, so a bit of a reprieve there for those banks. We also had the tech sector very strong, and in particular the SOX, so the Philadelphia Semiconductor Index. Chips doing very well. Nvidia, Micron, AMD, all of those stocks sharply higher, among many others. Of course, some of those companies do derive lots of their revenue from China and the Asia Pacific area, plus the supply chain deeply embedded in that area. So with any progress or hope around the trade tensions between the U.S. and China, you really can see those chips outperform on the day, up 3%, fitting again to the risk-on session seen in Wall Street session on Thursday, with stocks surging and bonds falling. From New York, Abigail Doolittle, Bloomberg News.
And I do believe that Wall Street session is having a bearing on Asian stocks this morning. Let's have a closer look at those markets. I'm joined now by Bloomberg's Sophie Kamruddin, who's joining us from the Hong Kong studios. Good morning, Sophie. It's looking like it's going to be a positive end to the week.
Yeah, we are taking that baton from Wall Street and running with it. Asian stocks set for a third weekly advance, trading at a 1-month high, with financials helping to lead the charge, similar to what we saw with U.S. stocks, while bonds are under pressure in the wake of that better than forecast U.S. economic data. And so tracking that overnight drop in treasuries that Abigail just described. Now, Australian 10-year yields this morning, they are back above 1%, adding as much as 10 basis points, while the Japanese yen and gold are on the back foot, given the shift that we're seeing in risk sentiment. Now, when it comes to stocks, Hong Kong gaining ground, up 0.7%, with the Hang Seng then on course for the best week since June. And Chinese shares extending gains today as well. The CSI 300 is trading at an April high. Now, over in Tokyo, it's autos and electronics makers that are leading the advance. When it comes to the Nikkei 225, which is trading at the highest level in about a month. Back to you.
Thanks so much for that, Sophie. Now, I do want to speak a little bit more about the trade talks between the U.S. and China. They seem to be back on track after the Chinese state media said that the talks between the two nations will resume early next month. However, this time, the U.S. has not given any confirmation about those talks. Derek Wallbank of Bloomberg News brings you more details in this report.
That certainly was an interesting thing when I was reading both of the two statements. They're not necessarily in direct conflict until we see the U.S. come out and say there was something wrong with the Chinese statement. We're sort of taking it as a broad agreement. But there should be some preparatory talks that should happen this month for more talks that would happen, according to the Chinese, in October in Washington. Now, getting back onto this footing of having talks in the first place is seen as a very, very positive market development for trade. This is certainly a step forward. Here's the problem, though. The problem is that the same underlying issues between the U.S. and China right now are the same ones that it were in about like April or May. And there's not really been a lot done since then. So there is a certain amount of pressure for both of the sides, really, since we've kind of been in a holding pattern here for several months, to actually show that there's some progress being made on any of these key points. That could be intellectual property, that could be pharmaceuticals, which the U.S. is annoyed about fentanyl importation. You know, it could be all sorts of various things, but there has to be some sign of actual tangible progress ahead of October 1 and what is another threatened tariff escalation on the board at that moment.
Meanwhile, in the UK, the fight over Brexit got a little personal on Thursday after UK Prime Minister Boris Johnson's brother, Joe Johnson, resigned as MP over the current Brexit strategy. While the calls for a snap election were shot down in Parliament, Johnson believes that the elections are possibly the only way to move forward on Brexit. Teresa Raphael of Bloomberg Opinion brings us more.
The Prime Minister has made very clear that he wants an election. He expected the Labour Party, I think, to give him one because Jeremy Corbyn, the Labour leader, has been saying for many months now that he would like a new election. However, Labour has calculated that giving it to Johnson on Johnson's timetable may not be the best thing. So they are resisting his bid for a new election until Johnson sees this new legislation that would prevent him from leaving without a deal, would force him to ask for an extension, pass. Potentially, this means that there's no new election until after October 31st. But we'll find out in the next few days, because the government's going to try one more time to get an election through before Parliament is suspended next week.
Is really not out of the question, right? Because if Johnson returns after those snap elections with a renewed mandate, then he could actually crash out of the EU.
Well, I mean, this is what Labour is, and in fact, all the opposition parties are dead set against. They want Johnson, they want to ensure that this new legislation that would force the government to ask for an extension is in place before an election is held. And some Labour figures actually want that extension to be triggered before an election is held. So there's disagreement over the point at which Labour would agree on new elections even. So there's nothing that's clear about this. But, you know, except for the fact that Johnson's had a very bad week. He had a bad day at the office today. As you mentioned, his own brother, who has supported a second referendum, has resigned at the worst possible time, basically saying there's a conflict between his family loyalty and the national interest. So that wasn't, clearly wasn't a good bit of news for the Prime Minister.
All right. Now, the jobs data that came out yesterday in the U.S. calmed some nerves about the possibility of a slowdown in the U.S. economy. But billionaire founder of the world's largest hedge fund, Bridgewater Associates, Ray Dalio, sees a 25% chance of recession in the U.S. this year and in 2020. He spoke to David Rubenstein on how central banks can respond to such a scenario. Listen in.
A recession, you know, it's 2 negative quarters of GDP. And we're going to be hovering, I think, fairly close to that level. And there's a certain variation around it. But the bigger things are a combination of the absence of effectiveness of central bank policies. So I hope we can talk about those, together with the wealth gap. A large wealth gap. So when the next downturn comes, what that will look like socially, politically, and so on. The elections, which is a issue between let's say, capitalists and socialists, or the rich and the poor, and then the emergence of China and in relationship to the United States. Those four factors are factors that have not existed since the 30s. I think they're unique. And so when we get into the question of the recession, I think it's how that will affect those other things, and those things affect it.
Now, you're in the investment world, your firm was well known for quite some time before the last recession. It was a very successful firm before, but in the last recession, your firm performed extremely well, maybe better than any other major hedge fund. So, as I recall, you're up 28% or something like that during the worst year. So, are you anticipating a recession now, and are you changing your investment approaches, or you're not quite where you were in 2007?
In 2007, it was pretty easy, I think, to calculate that there were these debts that were going to come due, and that there was not an adequate amount of funding. And so that sort of debt crisis was something we anticipated and we were positioned well for. When I go through those calculations, it's not the same. In other words, the amount of maturing debt and that whole problem doesn't look the same. It looks more like a gradual squeeze having to do with quite a lot of debt of a certain type. But with that, also pension liabilities and health care, particularly as that produces a greater squeeze. We have large deficits and so on. So the amount of promises that we have are large, but they're going to be coming at us at a more gradual pace, and I think that's going to produce a squeeze. I think related to that, what's important is that when you don't have monetary policy, being able to be effective. What kind of monetary policy we will have? We will have, more than likely, a lot of debt monetization.
He actually suggests that the Fed cut rates by 25 basis points gradually. But if you want to read a little bit more about that, it's available on the website, BloombergQuint.com. Let's have a look at what's making headlines across the globe now. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with the U.S. Federal Reserve, which says uncertainty around trade policy is holding back global growth and may prove a drag into 2020. A note says the rise in trade conflicts in the first half of last year accounts for the decline in global GDP of 0.8% in the first 6 months of this year. It adds that had trade tensions not escalated in May and June, the Fed would have expected the drag on growth to have eased. Outgoing ECB President Mario Draghi, meanwhile, is meeting growing opposition to his plan to revive QE and support the Eurozone economy. The Bank of France is skeptical about the need for new bond purchases, adding to criticism of the plan from German, Austrian, and Dutch policymakers. The ECB meets next Thursday, with Draghi facing the choice of adding QE without the support of Europe's leading economies. The latest on Brexit, now embattled UK Prime Minister Boris Johnson says he does not want a snap election, but it's the only way out of the Brexit quagmire. He faced the cameras with his policy in tatters, and his own brother resigning from Parliament in protest had his plans. Rebel Conservative MPs joined opposition parties to block Johnson's drive towards a no-deal Brexit, and a new 3-month delay in the process is now expected.
I hate banging on about Brexit. I don't want to go on about this anymore, and I don't want an election at all. I don't want an election at all, but frankly, I cannot see any other way. The only way to get this thing done, to get this thing moving, is to make that decision.
Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, so globally, the base is set for a positive session at the end of the week for us here in India, but Agam Vakil is here to tell you a little bit more about the trade setup for the day and also what's happening in the futures and options space. Agam, we've just spoken about the Asian markets and the US markets. They're both positive, the US markets especially. How are we looking here in India?
Very well, in fact, and the sentiment has improved over the last 2 or 3 days, Alex. That's, of course, that said, we're looking at a positive opening as far as the Nifty is concerned, based on the movements of the SGX Nifty futures, but we still have a couple of hours to go before the opening. So let's wait and watch. For now, things are looking quite steady. We saw a flattish movement on the Nifty, and we saw movements of as much as 50, 60 odd points on either side of the previous close. That said, there was a little more outperformance when it comes to the broader market indices. The same cannot be said about the banking indices. As you can see, there was a little bit of underperformance here, specifically the private sector banks, which is the reason why we are looking at the Nifty banking index trading weaker. But to talk to you about ADRs, we have strong gains in Tata Motors, Infosys, and Vedanta. So some of these counters do have been advancing in trade. Let's also talk about fund flows, because on the base of that, we get a better idea. Well, FIs continue to sell. Today, or rather yesterday, it was to the tune of 560 odd crores on a net basis, and DIs again remaining relatively quieter at around 700 crores worth of buying coming through, again on a net basis. Contributors where we did see gains from something like an Infosys, Coal India, ONGC cancel out by weakness in HDFC Limited, ICICI Bank, and TCS. So let's wait and watch for some of these names. Let's also talk about the futures and options space, because they may give you cues about where the markets are heading. Well, we have seen some amount of accumulation in open interest for the Nifty futures, and the Nifty banking futures is what is actually dragging the indices. Had it not been for the weakness for the banks and perhaps something like an HDFC Limited, where we would have very well seen an advance in the Nifty. That said, there's shorts building in. And as far as your open interest distribution is concerned, we're looking at a 300 point odd range between 10,800 and 11,000 in terms of changes in open interest. So we largely saw a lot more writing around the 11,000 call. The WIX, of course, was relatively stable. We didn't see too much movement in the indices, which means the WIX also largely remained at around 17.3. The Nifty put call ratio did, however, edge higher to around 1.2. Surprisingly, considering we really didn't see too much movement on the Nifty. Now, as far as your stocks are concerned, we had Container Corp, Equitas Holding, and Hexaware. All of them advancing, seeing longs, except for LIC Housing Finance, which continued to show weakness. And in terms of stocks, which is seeing unwinding, Kajaria Ceramics, Nalco, and Bharat Electrical. So some amount of short covering there as well. Alex, all in all, it was a reasonably steady day of trade. Let's see if this continues today.
Thanks so much for that, Akam. Now, auto was in focus yesterday with a lot of comments coming in from the SIAM convention. One of the headlines came from Managing Director of Tata Motors, Gunter Butschek, and he said that India's auto growth story was on the verge of collapse. He spoke to my colleague Nishant Sharma and said that this is the longest crisis that the auto sector has seen. Listen in.
If you just take the fact that this is a statistically confirmed the longest lasting crisis, people said it's 12 months, other people were already very, very generous and called it 18 months of a crisis. If you put on top to the PV crisis, indeed 12 plus months, and you take the CV crisis, where we actually got into cargo in the crisis already as of October, November last year, then beginning of the year accelerated by a crisis also on the construction vehicles in the sector of the medium heavy duty trucks. It's the longest lasting crisis this industry has ever seen. And as we always thought, next quarter is going to be better. Right. And after the fiscal year, the worst is behind us, it got worse. After we saw the first quarter of this fiscal year, which is normally a weak year, we expected there's going to be some slight improvement, getting closer to the festive season, and then slowly out of the monsoon, which has very powerfully come back the last couple of days. We actually expected the second quarter gives us some signs of recovery, early signs of recovery. But you have seen the figures that got published on Sunday afternoon across the entire industry, player by player by player, rock solid negative degrowth in rock solid higher two-digit numbers on wholesale. Because this is what is formally reported, and honestly speaking, taking at the same point of time into consideration that this is not only an automotive manufacturer issue, that this is an impact on the entire value chain. Right. Suppliers on the one hand side, which we are going to talk about tomorrow at the ACMA annual convention, and dealers, where it has even been shared today, a number of dealers which have actually gone out of business, who closed the shops. If this is not getting us close to the collapse of the growth story, be careful, because I didn't say the automotive industry is to collapse. I said the Indian automotive growth story is about to collapse. Because we expect it to be latest in 2 years' time, the third largest automotive market in the world. But with the backdrop we have experienced in the last 12 months, with a consistent degrowth of the market, has actually created a good gap against the initial aspiration. And if this is going to last longer, the industry is going to be automatically forced to also compromise on the future. So that means even if we get out of the crisis, as we would normally state, we are going to get stronger out of the crisis, we possibly get weakened out of the crisis, and the recovery is then negatively going to impact the future growth perspective. And that's the reason why I said the Indian growth story, that's muted a little bit, is at risk, but it could also collapse if we are not going to see a recovery soon.
All right, let's talk about something outside auto. Indians love new brands more than anyone else in the world. Only 2% of the consumers in this country prefer to stay loyal to a brand. That's according to a study by Nielsen. Charlene D'Souza spoke to Nielsen Chief Commercial Officer Patrick Dodd about the factors behind this. Listen in.
How are consumers actually looking at brands in India? Is there stickiness with brands? Because there's also, some consumers are actually moving from unbranded to unbranded right now, especially towards the smaller packs. But is there stickiness within brands, or are they still experimenting with brands? If you could throw in some flavor, and also globally, if there is stickiness with brands even today.
Yeah. So one of the things we are seeing is there is more choice out there than ever before for all kinds of reasons. Digital being a big piece of that, but even just the amount of brands that are out on the marketplace, be it in beauty care, be it in pet care, be it in household foods, be it that people are trying new international products in different, the world is globalizing. So the choice that consumers have is huge. And that's what's making it tougher for marketers out there. Manufacturers are building brands, retailers are building brands. And what we're seeing right now, we've just completed a study worldwide taking a look at loyalty or disloyalty, depending on how you want to look at it. And again, India ranked #1, but on the disloyalty scale, meaning that only 2% of Indian consumers said they will stick only with their existing brands. A good majority of them said they are looking forward and they love trying new products. And then a few of the consumers also said they like to try new products, and they will, but they need to be swayed a little bit, which means there's a big battle out there for share of mind and share of stomach, or share of wallet in terms of the Indian consumer right now. And India did rank #1. The global number there was 92. So that even shows globally there is a huge opportunity for marketers and companies to still steal some share, or really build the trust in their brands and continue to innovate so they can really stay ahead.
All right, with that, let's turn to the stocks that you have to watch out for and trade today. Somit Sarkar is here to tell you all about the stocks in news. Good morning, Somit. What do you have for us?
Good morning, Alex. I'll start off with Reliance Industries and the other telecom companies and the DTH operators and PVR and Anox. Now, all these stocks will be in focus because Reliance Jio has announced the tariff plans for its home broadband network, that is Jio Fiber. Now, they have offering 6 plans in the range of around $699 to $8,499, and with annual plans, an user gets a broadband router, 4K set-top box, television sets, first day first show movies and special sports content on selected plans, subscription to various OTT apps. Now, we do not know which are the OTT apps that they are offering, so these are what the a user will get with an annual plan that ranges from $699 to $8,499. Now, what brokerages are saying, now CLSA sees a limited impact of these offers on DTH operators, while Macquarie says that the plans are lucrative but not lucrative enough to grab more customers for Reliance Jio. Sun Pharma will also be in focus because the company company has clarified that the forensic audit has been ordered by SEBI on the company with respect to financial statements of 3 financial years, that is FY 16, 17 and 2018. Now, Bajaj Finance will also remain in focus because the company will consider fundraising via QIP on September 17th. Now, yesterday Bloomberg reported that the company is planning to raise close to $1 billion via share sale, and they have appointed JM Financials, Nomura and Kotak Mahindra Bank as bankers. Prabhat Devi, the company board will consider delisting of shares on the basis on September 10th. Now, promoters are intent to acquire nearly 49.9% stake from the public shareholders and then go for voluntary delisting. So this stock will also remain in focus. Also, Tech Mahindra, now they have announced a multi-year agreement with AT&T Network, but they haven't given any details of what is the deal size and the deal amount that they have signed currently. Hinduja Global Solution, now they have recovered nearly $1 billion in denied insurance payments on behalf of healthcare systems. And lastly, DHFL, because they have again defaulted in payment of NCD interest worth nearly 1.4 crore, which were due from September 1st to September 4th.
Thanks so much for that, Somit. All right, let's bring you an update from the political arena. Former Finance Minister P Chidambaram was sent to Delhi's Tihar jail by the CBI court after his 15-day custody in the INX media case came to an end. Chidambaram has been sent to custody till the 19th of this month. Arpan Chaturvedi brings you more details.
It was an eventful day for the former finance minister as 3 orders were pronounced in different cases related to him. One went in his favor while 2 orders went against him, and as a result, at the end of the day, former finance minister was sent to Tihar jail, where he is currently lodged. The first case, of course, was related to the Enforcement Directorate investigations against him in relation to the FIPB approvals and the alleged irregularities in the approvals granted to INX Media in 2007. The former finance minister had moved an anticipatory bail plea, which the Supreme Court, of course, rejected the plea, which meant that now whether to arrest him in that case, the discretion rests with the Enforcement Directorate. In the second half of the day, first came the order in relation to the Aircel Maxis deal, where also there are allegations of alleged irregularities. The special CBI court in that granted relief to the former finance minister as it allowed his plea for anticipatory bail and granting him protection from arrest. But the final order which came as far as the CBI investigations into the INX media case, the 15-day CBI custody for the former finance minister had ended yesterday. And after that, there were 2 options in front of the court, whether to grant him bail or to send him to judicial custody. The court, of course, did not grant bail to the former finance minister and has sent him to judicial custody till September 19th, which meant at that time was that the former finance minister would have headed to Tihar, and that's exactly what happened. And now, of course, the special CBI court will take up the plea where the former finance minister P Chidambaram has offered to surrender to the Enforcement Directorate to be subjected to questioning in relation to the INX Media case, while of course he remains in Tihar jail in judicial custody after the CBI court's order.
Here's an interesting update on technology. Even though there are doubts about the proper use of artificial intelligence, scientists are continuously developing it to eliminate human error. Now, AI may now be able to help in detecting and even preventing fraud. Here's how. All right, now with all this talk of economic slowdown, there's worries, or some people have worries about jobs. This weekend, we speak on BQ Big Decisions, which is our personal finance podcast, about the prospect of losing a job and what you should do in the event of that job loss to protect yourself from the disruption that most definitely is likely to happen. Do listen in. It'll come out over the course of the weekend. Thanks so much for watching. This is Bloomberg Quint.